GTA home sales just rose 9.4% year over year. That sounds like a hot market, but prices are still falling almost everywhere. Detached homes down, condos down, townhouses down. So what is actually happening here? Because those two things should not exist at the same time. And yet right now in the GTA, they do. This is the story nobody is explaining properly. And once you understand it, everything about this market makes sense. Let me start with the raw numbers from this week. June 2026. GTA data just came in. Sales were up 9.4% compared to June last year. That is a meaningful jump in activity, but the average home price is still down year over year. Condos in Toronto fell 9% year over year in June. That is not a small dip. That is a real decline. And across the broader GTA, the trend is consistent. More buyers are showing up. Prices are still retreating. Now let us look at May 2026 data alongside this, because together they tell a clearer story. The GTA benchmark home price in May was $946,500. That was down 6.7% from May 2025. The average sold price across all property types was $1,069,700, down 4.6% year over year. Detached homes averaged $1.36 million, down 4.7%. Semi-detached came in at $1.07 million, down 2.8%. Freehold townhouses averaged $916,000, down 8%. Condos averaged $639,000, down 6.4%. Every single category, down year over year. And yet sales in May were up 6.3% from May 2025. So we have rising demand and falling prices simultaneously. That feels like a contradiction. But here is what is actually driving it. Buyers came back to the market earlier this year. Rate cuts gave them more confidence to act, but sellers either left the market or stayed stubbornly priced high. New listings in May were down 18.9% year over year. Active listings were down 13% from May 2025. So supply tightened, but not enough to push prices up yet. Think about that carefully. Supply dropped dramatically. Demand rose meaningfully. In a normal market that pushes prices higher immediately. But the GTA is not operating like a normal market right now, and here is why. The price correction that started in 2022 and 2023 left a mark. Sellers who bought at peak prices are not willing to sell at a loss. So many of them are simply not listing. That is why new listings are down nearly 19% year over year. Those sellers are waiting, sitting, hoping. But the buyers who are active right now, they have serious negotiating power. The sales to new listings ratio in May was 37.2%. That is still considered a buyer's market. Anything below 40% generally favors buyers. So even with fewer homes available, buyers are still winning negotiations. That is what is keeping prices suppressed despite higher sales. Now here is the part that actually matters for buyers right now. Not all property types are behaving the same way. And if you are shopping in the GTA, you need to know this distinction. Freehold townhouses are the hardest hit on price, down 8% year over year as of May. That sounds alarming, but it creates opportunity for the right buyer, especially in cities like Ajax, Pickering, and Newmarket. Ajax has the fastest days on market in the entire GTA right now. Homes there are selling in an average of 21 days. Pickering is at 24 days. Newmarket at 24 days. These are the fastest moving markets in the region, and townhouse prices in those areas have pulled back meaningfully. Hold that thought. I am coming back to this. Semi-detached homes are actually holding up the best, down only 2.8% year over year. In cities like Vaughan and Aurora, where semi-detached inventory is limited, that relative strength is even more pronounced. Semi-detached homes under $1.1 million in those markets are seeing interest. Multiple offers are still happening in the right pockets. That surprised me when I looked at the data this week. Detached homes are still the biggest ticket item, obviously, at $1.36 million average across the GTA, down 4.7% year over year. But Richmond Hill and Caledon are sitting at 31 days on market. Sellers in those markets are waiting longer, which means buyers have more time and more leverage. If you are a move-up buyer, this is your window. And before I continue, if you are finding this useful, hit subscribe so you never miss a GTA market update. Now back to what we were talking about. Condos are the most complex story in this market right now. Toronto condo prices fell 9% year over year in June. TD Economics recently flagged the GTA condo market as facing serious pressure. They compared it to conditions not seen since the early 1990s. That is a strong statement, and it deserves attention. But here is the nuance most people miss. A condo that has dropped 9% to $639,000 average is still not cheap. Affordability improved, but carrying costs still matter significantly. Investors who bought pre-construction at 2021 and 2022 prices, many are still underwater or barely breaking even. That pressure is keeping resale condo supply elevated, which is what continues to drag average prices lower. But for a first-time buyer entering fresh with today's financing, the math is starting to look different than it did 18 months ago. Toronto condo affordability is reportedly back near 2019 levels. That is meaningful context for someone making their first purchase. Now let us connect this to what buyers should actually be doing. The GTA market right now rewards preparation. Sellers have negotiating pressure on them that buyers have not felt in years. But that window has a time limit. Here is why. Active listings were down 13% year over year in May. New listings were down nearly 19% year over year. The pool of available homes is shrinking. Sales are rising month over month. The sales to new listings ratio is climbing from 28.6% a year ago to 37.2% now. It is moving toward balanced market territory. Once it crosses 40%, negotiating leverage shifts. Once it hits 50% or above, it becomes a seller's market again. We are not there yet, but the direction is clear. What most buyers get wrong about this market is the timing assumption. Many are waiting for prices to drop further before they act, but the data is showing supply already tightening. And when supply gets thin enough, even modest demand spikes move prices. That is the setup forming right now across the GTA. If you are a first-time buyer in Oshawa or Pickering or Ajax, freehold townhouses in that price range are worth serious attention, under $900,000. Fastest days on market in the GTA. Room for negotiation still exists today. Whether that room exists in 90 days is less certain. If you are an investor watching the condo market, the mass market studio and one-bedroom segment remains fragile, but two-bedroom and larger condos near transit in Vaughan or Markham, those are starting to attract renewed interest from both renters and buyers. Rental demand in the GTA has not disappeared. It has simply paused while affordability and rates recalibrated. And if you are a seller thinking about listing this fall, the data suggests your timing instinct may actually be right. Supply is thinning, demand is building slowly, pricing strategically below overpriced comparable listings. That is what is getting homes sold right now. The homes sitting at 31 days on market in Richmond Hill and Caledon, many of them are overpriced relative to where buyers are willing to transact. Price it right, it moves. Price it with 2022 expectations, it sits. That is the honest truth about the GTA market in July 2026. Sales are rising, prices are adjusting, supply is falling, demand is returning gradually, the window of maximum buyer leverage is still open, but the data shows it is slowly closing. That is what the numbers are showing right now. What you do with that information is up to you. Chapters. 0 o'clock hook. Sales are up, but prices keep falling. 0:45 what? The June 2026 numbers actually say 2 o'clock. Why sales and prices are moving in opposite directions. 4 o'clock. Which property types are holding up and which are not. 6 o'clock. What this means for buyers across the GTA right now. 8 o'clock. Final thoughts.